Hello traders and welcome to another video review. Today is Monday, October 10th, 2022. Let's find out what is going on the financial markets at the beginning of the trading week. It doesn't look very busy, to be honest. It doesn't look to be busy at all, today's Forex calendar. However, we still have some comments from the officials that are going to be released today. Of course, first we got some comments from the German members of the bank. The Buba Wuermeling will give a speech, and the German Buba president Joachim Nagel will give a speech as well. The first one at 11:10, the second one at 2 p.m. At 3 p.m. we got the ECB Lane speech. Then we have FOMC member Brainard. He will give two speeches at 7 o'clock and 7:35, and at the end of the day we got some data from the New Zealand in form of the electronic card retail. Says those data are scheduled for release quarter to midnight. So that's the situation on the Forex market for Monday 10th of the October. Let's just find out what is going on the majors today at the beginning of the new trading week. We are going to start with the euro to the dollar. Why? Because it makes a very interesting move to the downside. After 4.84% rally to the parity level to test it from below, we have the wave A of the correction, wave B of the correction, and right now we are continuing with the wave C of the corrective cycle. So what do we have here? 50% has been violated. 9,767, and then we are approaching the 61% of the Fibonacci retracement of the last wave to the upside, located at 9,713. This is the target for the wave C as well, and it's located just above the level of 9,700, which is the local technical support. The other levels important for the euro dollar for today are 9,737, 9,751. Those levels are the technical resistance for the price. So now I'll change the color. I will change the color to the red. There you go. So the 50% was violated. We don't need this one anymore. So we wait for the 61%. And what we should expect when this level is hit, we should see increased bullish activity towards, of course, the first two technical resistance levels. But if those levels are violated, we should see extension of the upside movement towards 9,811, 9,935. So those are the targets level for bulls for today. Please notice the fact that if this is the double bottom, a little bit, as you can see, skewed to the downside, and if this is an impulsive wave to the upside, then what we should see is ABC to the downside as a corrective cycle, and then continuation to the upside. Okay, so we should break above the parity level. However, if there is a failure to rally on the euro dollar after ABC to the downside is made, so if this is our plan according to the short-term outlook, yes, short-term outlook is the rally somewhere to the upside. This is not the target level yet. Okay, so that's the wave one, ABC correction to the downside, rally to the upside. Okay, if there is a failure and the market breaks lower and lower again, that's a very, very negative sign for the bulls. That means the higher time frame trend will continue, and we will see lower levels below 9,538 soon. The British pound for our chart looks very similar to the euro dollar. What do we have here is again 5-wave advance to the upside, 11.11%. Very nice bounce from the record lows haven't seen from 1985. The level was almost parity, 1.0346. ABC to the downside below the 30 period moving average. So right now we extended the down move below 100% of the wave A, measured from the bottom, from the top of the wave C. So that's the measurement is already done. What we can see right now is 127% target level, 1.10 and 36. That might be the target for the wave C. Okay, so then the length of the wave C will be 127% bigger than the length of the wave A. Okay. Or we can even extend the down move towards 161%, located at 1.0940, for very close to the technical support located at 1.0928. So this is very nice, nice level, and this level might be hit as well, and because it's very close to the technical is very close to the Fibonacci retracement, very nice area for the bulls to maybe be more active and initiate some kind of a attack on the prices. So what do we expect here? Again, just as it is in the case of the euro dollar, we have 5 waves to the upside, correction, and we should continue the up move. Let me just find out where are the Fibonacci retracement. Maybe we have some nice confluence. There you go. This is 61% at 1.0783, and the 30. There you go. There's 50 and 38%, so the 38% is very close to the 127%, and the 50% of the retracement is very close to the 161%. So very strong areas here on this chart. Let me just put some rectangle for you to see what's the color. There you go, very nice. This is the first target zone where we can expect a bounce. So let me just do it this way. This is where we expect a bounce, and this is the zone where we expect a bounce here. Okay, let me just make it short. There you go. This is the zone when we expect a bounce as well. There you go. So either here or here, right? We should see increased bullish activity. If there is no increased bullish activity, if there is no rally to the upside, the last resort is 61% retracement at 1.0783. If we want to bounce from here, we go down. Okay, on the British pound. So that's the British pound to American dollar. What is going on the Japanese yen? The Japanese yen, let's switch to the daily because it's better, always better to see what is going on here. Our 5-way structure is still intact. We are still developing last wave, the 5th wave to the upside. Let me just put some sort of the target levels for the wave 5. So the target levels for the wave 5 are right now like it is. So maybe 1-to-1, there you go, and 0.86, here you are. This is 0.86, and then what we need more is the external projections of the wave 4, and I think maybe 1.61. Okay, not to the downside but to the upside, so we need to do it this way. And there you go. Maybe 161 will make another Fibonacci confluence level. Okay, so this is why we put it here. 161, not too bad, not too bad. However, 261, it's a little bit too big, so I think there will be much more less used level of 2. There you go. So the 2 is right now, this is on the bottom, so let's put it on the top so we can see. There you go. Those are the levels. Of course, don't mind this one. Those are the retracement, the usual retracement. However, the Fibonacci projections, external projections, very interesting level for the wave 5. Based on the Fibonacci projection is around here, 149.18, 149.67. However, please notice the fact that we are getting very close to the level of 150. Why this level is important as well? Because this is the psychological level. Why psychological level? Because it's a round number. So I would extend this kind of a line here and then extend the area somewhere here. So that's the target for the wave 5. So please stay focused. And please notice the fact that we might break above 145.91 first, maybe even today, if the volatility will be strong enough. However, the momentum is positive. However, the volatility is not that big. When we break it, then the first target is 147.89. This is the target for the wave 5. So that's the first target. This is the first target. And then the secondary target is the zone. And somewhere in the zone, wave 5 might be terminated. So that's the outlook for the US dollar to Japanese yen. Let's take a look at the US dollar to the Canadian dollar. For our chart, let's stay with the daily this time. Daily time frame chart, very nice pin bar here, bullish engulfing pattern, kind of a 2-day retracement, 2-day bounce, and right now the bulls don't know what they want to do. However, they have a very strong up move in the background. So let me just switch to the 4-hour chart. So what I want to show you is that this bounce here might be done. This bounce here is 3 waves only. So what do we see on the lower time frames? Is this. This is the wave A, this is the wave B, this is the wave C. So we have 3 wave movement to the upside. The high of the wave A is somewhere here, and as you can see, this candle penetrated the area of the wave A. So the wave A top is 1.3694. This wave low, this candle low, however, is 1.3674. So that's 20 pips. That's a lot. Okay, so probably this is now the main movement. It even looks impulsive. 1, 2, 3, 4, 5. The wave 2 is somewhere here. Okay. This looks corrective, so we should expect right now, according to this scenario, if it's correct, down move towards 1.3421, 1.3392. So that's the outlook for the US dollar to the Canadian dollar. And last but not least, let's take a look at the US dollar to the Swiss franc. And let's just jump back on the daily. There you go. So what do we see here on the daily? The market keeps moving up and down, doing the swings. Okay, the recent movement to the upside looks like it's completed, because if we put this movement here from here, there you go, 100%, right? So 100% geometrical measurement is done. So what do we have here is wave A down to wave B, and the target for the wave C almost done. There is a miss of, I don't know, maybe I should bounce this one a little bit. There is a miss of maybe not even 10 pips. Okay, so that's a length of the wave C. It's equal to the length of the wave A, and we got first reaction. The market tries to do something with it. However, with that consolidation, it might be negative for the US dollar, and we could see a down move. However, please notice the fact that we are still trading above the 30-day moving average, and as long as the 1.0063, so again the parity level, and the parity level in that situation is located just around here. So that's 1.003. So this is it. If that level is violated and we extend to the upside, there is still room for the US dollar to rise more, 1.0113 and even higher. So that's the outlook for the US dollar to the Swiss franc. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.